NASDAQ's breaking out here. It looks amazing. I am kicking myself because I almost bought in and missed the low just narrowly. I mentioned earlier on the trade tracker that I've got my positions lined up. I am very long stocks right now, which is great, but I really wanted a NAS 100 trade long, and I'm still looking for it. So here's my my approach to this move. I am looking for this chart to come back down to this level. If it does, I'm not saying it has to, but if it does, I like that for a possible long side opportunity. I think we've broken out. I think there's a very strong chance, not a certainty, but a strong chance that we've seen the low of this corrective move. And just a heads up, this is not a bear market. What do you mean, Nick? Yes, it is. Look at the chart. Nope, it is not a technical bear market. A technical bear market, by standard definition, is when the market from peak to trough closes 20% or greater to the downside. From the highs, we got down. Oh, we're looking at NASDAQ, sorry, S&P. We got down to 21% from the highs. Did we go into a bear market? Well, maybe for like 30 seconds, but we didn't close there. So by technical definition, where we closed, the lowest close that we've gotten is 19%. That puts us in a technical correction. A correction is 10%. A bear market or quote unquote crash is 20% closed down or more. Did we get that? No. So, Nick, you're telling me, that's right, I am telling you this. I'm telling you that what happened here looks to me like a bull market pullback, just like a lot of the ones we've seen before. But Nick, no, the market's going to crash. Trump's going to ruin everything. Oh, I don't know if he is or is he not. I'm not a fortune teller. I can't tell you for certain. But a lot of people were pretty convinced that this market was going to crater down 50%. I saw somebody saying, I watched this guy's video and he was making the prediction. Sorry, we got breaking news. Let me go. Where are we at? 241K. Okay, unemployment claims actually coming in a little bit soft here this morning. Let's take a look. 5-minute chart dropping a little bit. That is actually a bit of a negative surprise here. Dollar index lower as we would expect off that. My euro trade might look a little bit better now. There we go. I'm long euro as of like, what, 10 minutes ago, 20 minutes ago. Went long in the group euro dollar around 1.1316. Yeah, so we've got unemployment claims coming in here, 241,000. That is weaker than expected. And gold, I just got stopped out of gold, by the way. And let me not breeze over that. You know, I always want to make sure that on my channel, when I'm sharing a trade idea that goes wrong, I said this yesterday, and I just want to reiterate it. When I take a stop loss, it's not something that hurts or is a big deal because my size is not massive. Do I like taking stop losses? Of course not. Nobody likes stop losses, but there's an important distinction to make. I stopped out of my gold trade here because the trade just did not do what I thought it would do at this level. And that's okay. Doesn't mean I'm abandoning gold and I'm never going to trade again, or I'm super upset about it, or my account got crushed by this. Not at all. We took a small loss on gold here. And now we'll watch to see how the data falls. And if there's an opportunity to get back into gold, I'll definitely be looking for it. So I stopped out of gold here this morning. Broke this level here around 32.66. That was kind of my line in the sand. We were showing some signs of trying to hold this area, but breaking to the downside. But we're sitting at a support level, so we'll see. But I don't like the fundamentals as much for gold at this moment. I will show you exactly why. So if we go to the top setups page, you guys know I'm kind of a perma bull when it comes to gold. Like, I always want to be looking for gold longs when things look appropriate. So don't take me as a betrayal to the bull case. I just don't have the same conviction that I did for the first part of this year. January, February, March, April, I was super bullish on gold. Not because, you know, I felt bullish on gold, but because my system told me to be bullish on gold, right? We can look at this really quick. Let me just do score table, right? So gold lost its bullish reading on April 25th. So what I'm looking at is the Edge Finder's historical score for new viewers, okay? For new viewers learning about the Edge Finder, greater than 5 is considered bullish, right? I'm sorry, 5 or greater is bullish, right? -5 or less than that. I'm sorry, I'm just getting my things mixed up. -5 or less than is bearish, right? So those are our readings on the Edge Finder score. Where's that score coming from? It's coming from sentiment data. It's coming from economic data. It's coming from technical data. Our system, I'm not going to get all the way into the weeds of how it's scored, but just understand the Edge Finder lost its bullish score for the first time in quite some time, April 25th. April 25th was the last, the 24th was the last bullish day. Since then, it has been back into neutral territory. A slight bullish tilt, but still a neutral zone. And I'm sad to see it go because we have been bullish on gold since February 6th, right? Did we have anything before that? Okay, actually, I take it back. I'm sorry. I said January, February. Only from February 6th until a couple days ago was I bullish on gold. That's my stretch. That was my stretch where my system told me bullishness is still favorable. We launched the Edge Finder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm, showing traders the most convicted top ideas that the Edge Finder is producing now. The Edge Finder has helped traders go from beginner to pro in terms of the fundamentals and has helped many traders go from unprofitable to finding the missing pieces in the name Edge Finder. So if you're not already using the Edge Finder, let me tell you about the biggest discount that we offer all year long starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the Edge Finder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now or in the description of this live stream. If you've been thinking about getting a copy of the Edge Finder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the Edge Finder at the super discounted prices. Thanks for watching. And now back to the show.
The pound and US dollar.
Okay.
For me, it looks to be reversing from this very short-term descending channel, printing some bullish momentum right now. And also fundamentally, this is a very strong currency pair. On the daily chart, it does look okay. So I think for a bullish play on the 1-hour chart, this looks very, very good with this little bit of momentum that you're seeing. And the second one for me would be the euro and US dollar. Pretty similar scenario. So the daily chart does look pretty good. The fundamentals are bullish, which is good. And then on the 1-hour chart, I'm getting this sort of a, let's say, grab of liquidity. I'm getting a very flat range and then a little bit of a descending channel and then a nice reversal to the upside. So for me, I would pick the pound and the euro for buy setups on the 1-hour chart. But again, today you have Bitcoin, you have the NASDAQ, you have the S&P, you pretty much have a lot of things that are moving. EJ is great. It's looking very healthy right here for a buy setup. So yeah.
Yeah, no, that's a fair list of stuff. I mean, like you said, Bitcoin's looking really strong. You've got a little bit of a divergence here. Actually, I'll just show you a really cool chart. I was just looking at myself. The Bitcoin to gold ratio chart looking like it's breaking out. This is a really interesting kind of quick sentiment indicator. We've added it under our market sentiment tool. So for a while, gold has been significantly outperforming Bitcoin, but we recently just broke out, it looks like, and now Bitcoin is kind of showing some relative outperformance to gold. What that might suggest is that we went from a risk-off type environment where people are more fearful and not willing to take any risk, to now possibly starting a bit of a risk-on rally again, maybe some upside for stocks, and for some of the more aggressive currencies like Kiwi, the Australian dollar, etc. So something to think about there. Miko, chart of the day for you. What are you watching?
Yeah, so I've just hopped into a position Aussie CHF, long on that one. I like this one a lot because it is coming from all-time lows. I do think there's a lot of upside for this one. We've had a really big flush to the downside. I'm anticipating price to recover. Looking at how price normally does maneuver when we do create all-time lows, we do tend to pull back pretty strongly afterwards. So I'm looking to see if I can take advantage of that opportunity and see if price can retrace a lot further. I've entered a trade on the 4-hour chart on this candle, which was actually yesterday, but still hasn't really gone anywhere since then. But I'm anticipating more upside. I like the opportunity. I feel like the market's quite stretched, and at the all-time lows, my thinking is that there's probably less sellers at these prices, and we could see price push up from that basis. So Aussie CHF and some of the other CHF pairs do have the opportunity to go higher.
Kind of interesting, like pretty much another more oriented towards risk on currency pair, right? The Aussie Swiss, if it's going up, it's going to typically prefer to see stability in terms of global activity. I mean, Australia, right? Big producer and exporter of commodities. And then you have the Swiss franc, which is kind of the defensive currency. So by shorting the defensive and buying the aggressive, it is kind of there's some correlation between global equity markets and things like the Australian dollar, which typically do better in calm waters, if you will. So really interesting to see that you're starting to see some of the same markups, same directional changes. We've had a bit of a shift, right? We went from this everyday selling, dramatic moves lower on everything. And then now, again, today, take a look at the Japanese index, or the Japanese currency index, down 1.1%. I guess that's another question for you guys. And Nico, I know you've talked a lot about the yen. What are your thoughts here on this? So you're seeing the Japanese yen pulling back. Do you think there's some opportunities to step in and buy the Japanese yen at a point, or would you be not interested in that?
At the moment, I'm still pretty bearish on the yen, but I feel like we might be seeing a bigger pullback than I expected, because I've been looking at the yen basket, and it looks like price is rejecting resistance pretty well here, and at the moment we're selling off pretty harshly. But my main thinking is that we are still in this uptrend, so I still have this bullish bias for the yen basket. So if this is going to push, we're expecting yen strength, and then opportunities to sell the yen pairs. If this continues, perhaps we take up this low, then I'll lose that bias, and then I'll step away from that expectation for yen strength. But yeah, price overall is quite correct. It's not like we've been trending very healthy to the upside. It's very corrective, which is a sign that maybe we could be looking to turn around. But again, market structure is kind of my focus in terms of direction, and so far that's still an uptrend. So I'm still kind of anticipating yen strength until proven otherwise, until we break some lows.
I like that yen basket indicator or a chart. What is that actually? So it's with TRADU, TradeView.
Yeah,
I imagine that's just some brokerage or something, but that's cool. I have not seen that one before. I've seen people do like equal weighted dollar index. Have you ever seen those ones? I think that one's really cool too.
No, looked at that.
Yeah, basically it does, like, when you pull up the DXY, right? The pros and cons of DXY, it's kind of like the S&P 500 versus the S&P 500 equal weighted. But when we look at the dollar index, we're really looking pretty aggressively at like the euro relative to the dollar, right? As that carries a lot of weighting in the dollar index. But there are ways that you can actually do an equal weighted, where you equalize, Aussie's impact and CAD's impact and Euro's impact, which would give you a little bit more of just a how's the dollar doing relative to everybody else, rather than how's the dollar doing everyone else based on weighting, right? Where it really, if the euro has a really bad day, the DXY is going to go up quite a bit. Whereas if the euro has a really bad day and you're looking at the equal weighted, the dollar index will go up a little bit, but it won't, dominate. So, all sorts of different ways to look at markets. I actually do think personally, I generally prefer to look at the weighted stuff like the S&P 500, because again, Meta, huge company. I actually want to see that weighting within the same thing with the dollar index. I want to see the euro's impact and the yen, the bigger currencies relative to the dollar. But it can be also useful to get both perspectives. So that yen basket that you did is cool. There's all sorts of different charts that I would encourage listeners to explore your options. Look up equal weighted dollar index, equal weighted S&P 500, which you can do with RSP. It's an equal weighted ETF. So it looks at every company within the S&P 500 and just says give equal allocation and how would the performance be, which is, you're not giving Apple, huge chunks of the weighting. You're giving it just one is equal as Delta Airlines, right? So every single one is getting equal weight. So just cool things that you can explore and learn. And, us chart junkies always looking for new things to stare at. So good stuff. Marco, question for you too. Last time we talked about gold, I stopped out of my gold. I had a trade that went really well. We talked about that. I ended up taking profits, and then I decided to re-enter with 1/2 of the size at a level of support that I thought would hold. And then I stopped out here this morning. Are you looking at gold? Are you trading gold at all?
Yeah, I'm waiting for a signal on the Edge Finder. So if we quickly flip to gold, waiting for that signal. So until that happens, I won't be able to do much, but I do like that we are pulling back, retracing a little bit. Something that I've started to look at is possibly the 20 EMA, just to get a gauge of if we're overextended. Now with this pullback, I kind of like this actually. So if we can go maybe a bit lower to this support level and then get a bullish reading on the Edge Finder and a nice entry on the 1-hour chart, I would be pretty happy to look for buy setups. And that is going to be my game plan for gold. Current market environment is switching from risk off to a little bit risk on. So that would not be bullish for gold. But if it cannot be sustained, if we get some, let's say, pausing on the S&P, if we get a bigger correction, or if we get some tariff news that is not so great, well, then gold can absolutely go up a lot. And then silver, if we do break some of these highs, I think it could be a really good bullish play because it has a lot of room to catch up to gold. So if we can break these highs, get a extremely risk-off environment, so get a major tariff news that is not going to be great, I would think that silver would maybe be an even better play than gold. So we will see what will happen. I definitely have my eyes on both metals, and currently maybe silver is actually bullish on the Edge Finder. I would have to check that again. So yeah, silver actually really interesting if it does go up more.
Gold, in fact, everything is driven by something. What is driving gold? Why would a market mover, let's say, why would they go and buy gold? Well, they're not buying gold because it was a Head and Shoulders or whatever it was you were referring to. They're buying gold because there's some risk in the economy, there's global tensions, there's something going on, so they want to go to a risk asset. And the same thing applies to every market. There'll be a reason to go into that market, and a technical thing generally isn't, especially on the H4. Maybe if it was like a monthly 200 moving average, I would kind of get that a bit more. But Amazon only at 5. Is it time to buy today? I don't know. How would I know that? US 30 is also a good spot to go long. It is very bullish apparently, so let's have a look at US 30. Potentially, yes. I really like the level here. This previous resistance. I suppose the way I would, if I was going to buy this, I would also, I've spoken about it a few times. I'd need this trend to change. then the pullback, and then the continuation. So I'd look to enter into this market once we've had that trend change. Right now is a little bit premature for me. I don't really, there's no technical entry here for me. Loaded up on eggs. Look at Alan, real smart investor buying eggs. Yeah, Med Dali, I agree. What would it take for the dollar to continue its downtrend? I would say a deterioration in trade talks. So if we saw the China and US discussions take a turn for the worse, so if China turns around and says we're putting 500% tariffs on the US, and Trump turns around and says we're putting 1,000% tariffs on you, that's going to be pretty bad. Same thing with Europe. If the trade talks there don't work out, and if that whole 90-day pause just ends up to just make things worse, then that would be a deterioration on the dollar. Also, if we see weakening in data, so if we continue to see, if we see NFP and unemployment come out tomorrow quite weak, that would also contribute to a downside on the dollar. USD CAD. I don't mind that in theory, because we do have oil that's taken a real hit over the past couple of days. Dollar is potentially making a comeback here. Well, the market is down actually. Let's see. The daily trend's about to change, which isn't great for me actually. Although this does look like a really good break and retest. I mean, we've got a really strong level of resistance through here. We've broken above. Could be the retest here. We'll see. But yeah, the daily trend change is a little bit of a red flag to me. So yeah, I'd be very cautious on technical side. I think fundamentally it's okay. So we've got ISM coming out now at 48.7. Beat. I got that completely wrong. What did I say? It was 47.5 or something. I said something lower, didn't I? So dollar up off the back of that. We've got oil not really doing anything. Gold's down. We've got S&P also not doing very much up. Dollar's doing quite well off the back of that. ISM manufacturing prices came out to 69.8 compared to the 72.9 forecast. So that's not great, but of course we're paying attention to the ISM manufacturing. So the manufacturing of the US, so what the US is essentially creating is great. Oh, well, not great, but it's improved 0.7 since the previous 0.7 compared to forecast is what I'm trying to say. So that's good for the US dollar. It's a good sign for the economy. So yeah, all good. Actually, yeah, sorry, I completely missed that. It is below 50, so it's not actually all good, but swings and roundabouts. It's above above forecast. So there you go. Although below previous, so it is what it is. Ball Out's decided to show his face. Welcome, Ball Out. Good to see you. So yeah, actually very little off that. I mean, it's a bullish move, but remember this is the 5-minute time frame, so very irrelevant really. A 0.16% gain. Yeah, very little movement off that. But dollar up still. So although it's below 50, it's still positive because the way it works, I assume most of you know this already, but for anyone that doesn't, the way news works is during this period, this is people placing trades. In fact, maybe not this period specifically, but before news, we have a period where people start pricing in what they expect, and that's what the forecast is. So because even though it was lower than 50, it's still good for the dollar because it beats the forecast. So people were selling, they will have closed those sales and gone long or whatever else, kind of just the way trading works. So hopefully that makes sense. Tried to make that as concise as possible. Okay, so let's have a look and see, what did gold do? Yeah, nothing really. Although, yeah, gold looks like it's going to continue lower. I wouldn't want to buy this, to be honest. It looks precarious. It's like sitting on the edge of a cliff here, because if we break lower and break this 200 moving average, we have a lot of room here really to continue lower into, so back into the 3,000 range. So I don't really want to deal with that. So I might chill for a bit and ignore gold.
We do have the Fed coming out May 7th. They're not going to cut rates. That's still kind of baked in like 93, almost 94%. So the watch tool here. Okay. So make sure I'm good on my calendar today. So I'm going to go for like another 7 minutes or so. So 95 point, yeah, there's almost a 96% chance they're not doing anything in May. Let me check Trueflation for a second. What's our inflation picture look like? I mean, it's down. I mean, the market's dropping 20% is deflationary because it forces everyone to cut back. I don't think that the labor market is really reflecting. So initial jobless claims. This is what I've been watching here for the last couple of months. I mean, if we start to see this spiking higher, then that's not a good sign. If we start to see initial jobless claims and continuing jobless claims trending higher, that's not a good sign. But so far, I mean, this might be a little alarming, maybe a little bit. This is continuing jobless claims, but this is like one data point, doesn't make a trend, right? So are we going to see this continue to go higher? If this goes higher, then we should start paying attention to this labor market. But if this continues to go, well, it's up this time, and then it's down, then it's up, and then it's down. I mean, that's a pretty big swing. But if it levels off, then we're still in that kind of no recession scenario where if there's no real labor struggle, then it's probably not going to be a recession. But this does look like if it keeps climbing, like it's going to be something we should pay attention to. So don't ignore initial jobless claims, continuing jobless claims, because that is going to be a theme for this year. This whole idea of the market going all the way back to the top again, if it happens to me, it's a bubble. I mean, I think if this market gets all the way back to the highs, this is a freaking bubble that is on the brink of broadening pattern. And when we come back down, we're coming all the way back down those lows again. The nice thing is if that happens, you can make a lot of money on the way up still by just a melt up. But if you can, time this over a 1 or 2 year window, there's a fortune to be made in that. And it also could be done with a very small risk. I mean, I could probably risk $1,000 to stand to make maybe 30 to 40 grand. There are ways to position for that, like massive reward to risk. And that would be great, because up here, it's like, I'm very cautious of how high this market goes. And it just is the same story. It's like cautiously bullish, climb the wall of worry. Am I just stupid for fighting this market? I don't think I am, especially if, real data becomes earnings compression, labor market slowdown. I don't know, all the stuff. So as I've said this whole week, I am cautious right now. We are back to the 200-day moving average. We still have a majority of the S&P 500 below the 200-day moving average, which means that the broader market's still in a bit of a bear market until everything is back above the 200. So if we have, 50+% of S&P stocks greater than the 200 moving average, then I could say, okay, maybe this is going to be a full-on recovery. That's the slow lagging timing, but maybe we're there and we're going to see some market breadth. But if this turns hard, then we never get the market breadth above the 200, and this is just a matter of this was a nice recovery, but here we are right back in the middle. It's not at highs, it's not at lows, and this is no man's land. That was literally the title of my session yesterday. No man's land. It's like, what do we do? We're not bullish, we're not crazy bearish, we're just in the middle. And maybe that's where the market's going to be stable for a little bit, but it's not really going to give any sense of direction. So just saying, it could be a little more difficult. Okay. All right. Any other charts? We did dollar, oil, gold, silver, all currencies. Did the indexes. I didn't do the Qs real quick, but Qs are up as well, just above the 200-day moving average. I measured this one out at NDX, I think. Yep. So symmetry plays. So low to high, higher low to higher high. We're getting right there towards that March high. So that would be some resistance on the NDX. QQQ, same thing. We have some gaps to fill. I mean, now that this gap is available, this gap is available, does it run into some resistance here? Do we pull back into those levels first? Right? It doesn't have to be like a full-on bear move, but I do suspect that we would have some type of retracement. What's going to be the call? I have no idea. Just maybe profit taking, maybe some bad news pops up, I have no idea. If the market keeps going higher, it does make me even angrier that this is what happened. You know, like, this didn't need to happen. If the market's going to all-time highs, this didn't need to happen. All it did was scare the crap out of everybody, blow up some accounts. It blew up like everyone that's leveraged. If you're leveraged, a lot of accounts are blown up there. The basis trade, it's one of the biggest providers of liquidity in the bond market. It blew up, and somehow it's like, yeah, we're back to all-time highs. Like, I'm a bit of a realist here. It's like, I know how disruptive these silly events are. And you know, how do we fix it? Well, the narrative changes and there's more fiscal policy. Like, that's it. There's no monetary policy coming in right now, but the global liquidity is increasing. Fiscal policy is increasing. And it's, you know, we're being told that we just drained the swamp, which we didn't. Like, we pivoted so hard on that April 7th, April 8th, April 9th window that I don't know if the market goes back up, right? Market goes back up. It's just very disruptive. It conditions traders yet again to buy the dip. And I'm just telling you, be prepared for that next correction to be a legitimate bear market, that you don't buy the dip, right? That's the one that comes in and lower highs and lower lows and lower highs and lower lows. And that's the pain trade. Could be, you know, a nasty bear market with a reality check. But I'm not going to call that right now. I'd feel much better calling a bear market when we're sitting here at crazy all-time highs and a price to earnings at 25, 26, 27 PE. Then sure, I'll be a little bit more toppy in the markets. But until then, it's like, well, enjoy the ride. Okay. All right. I don't know what's going on in the chat here. I just see a lot of crazy comments. So I think I'll wrap it up there. We did all currencies: gold, silver, Bitcoin, indexes, stocks. We got earnings today on Apple and Amazon, so keep an eye on that. Non-farm payroll tomorrow morning, forecasted for 133, and average hourly earnings at 0.3, unemployment rate 4.2. You know, like I said, I'm going to be watching initial jobless claims, continued jobless claims. Let's see what the numbers give us tomorrow. Is this going to make the market flinch like GDP did this week? The market clearly flinched, but it wasn't enough. I mean, we still had Mag 7, which is stronger. Wall Street's still up. And, you know, the core PC coming down was seen as a good thing, I suppose. Also, Trump tweeted something yesterday, or I don't know what the hell he said yesterday. I don't know. It's every stinking day. So, but negative GDP is a flinch. So is non-farm a flinch? Maybe. We'll find out.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.